Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, December 19, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, let's start with where she finished, which was below yesterday's low. That's not a good sign for the bull case. It wasn't on as heavy volume as yesterday, but certainly still increasing volume from the recent past. Today was what we call a DCB or dead cat bounce early in the day. She gave up the ghost by the end of the day, meaning gave up the gains. Turned out to be the proverbial gap and crap situation. Let's talk about where the rubber meets the road. Where's the low going to be? When's the next low coming in? Why is that even a possibility? In other words, what are we looking for and when? Good question. Let's cut right to the chase. First of all, traders that have taken the MSF Master Class went through a series, or one of the modules was on cycles. Those traders are keenly aware of what's coming up this weekend. We do have a tinfoil hat event. We also have a specific day that has importance. Therefore, let's lay it out on the table. We're looking for a turn. Now, my ideal situation is we have one more flush day. Maybe the market comes down to 582.60. Maybe it's below that. Maybe she fills the gap. Maybe even below that. But leading into the weekend and coming into next week, I'm expecting a turn. I'm looking for a turn. The ideal scenario is one more flush day on Friday and then turn them into next week, into Christmas week. We have a Christmas rally into New Year, the whole 9 yards. That's the ideal scenario. Do they give us the ideal scenario all the time? Of course not. We're mapping out the possibility based on where we are in time and price. Even if this ends up being a more meaningful high up here, and all we get is one more flush day and a nice reflex rally for a few days, that's fine. That'll suffice. I'm not necessarily looking for new highs right now. It's not necessary. The market's down enough where a normal garden variety bounce will pay the bills. About a little intermission, lazy swing trader, automagical algo system. A lot of long trades issued this week. Some are flat, some are slightly in the money already, some are slightly out of the money with the market going down like this. That's normal garden variety behavior. Here's Lowe's companies. This was a short trade alert at 275.69. Covered today a third exit target at 247.50. How you doing? You got to have both shorts and longs. You got to be flexible. The automagical algo system takes care of business. What about inside the numbers? Did anybody make money today inside the numbers? We had a couple of scalp trades where traders in the live room and inside the numbers had opportunity to pull some money from the market. We had some traders play the long side. We had some traders trade the short side and the long side. We have a potpourri. We got traders trading stocks. We have traders trading the SPY, the NQ, IWM, gold, silver. Hold your horses. 586.85 is our bear pivot for now. If they try a snapback situation, 593.15 would be the first target on the upside. Let's take those two numbers and put them on the board. Now let's just get our faculties here for a second. Right of the vertical is today's activity. This is a 5-minute SPY chart. 593.15 came up short of it by 15 cents. The high was 593, margin of error. And you could see here right at the end of the day, right into that bear pivot, closing below it just by pennies. Interesting behavior. Run down there right at the close to make a statement. That's the way I am looking at it. These numbers were on the board at 0 dark 30. Let's see what we have at 9:15. What's the scoop? Well, There's a swath of points in either direction. We've got the same 593.15 as a target and resistance in the northbound lane, so that turned out to be correct. 586.85 is a place of support and a target if they head down that way in the southbound lane. 586.85. Now that's interesting. A number put up before the opening bell certainly ended up to be a potential bounce place. No time left on the clock. Not many traders willing or should take that trade, but nevertheless, just goes to show you that the numbers do work. 586.85 and the bounce. The high in the next candle was 589.22. Doesn't look like much on this 5-minute chart, but when you do the math, that's quite a swath of points in just a matter of minutes. It's like 25 S&P handles, give or take. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. How about 937? 590 is short-term support. And then you can see it again at 950. 590 is important, zeroing in on 590. Certainly, you can see where that was important. The large majority of the day, the market traded in and around 590. Turned out to be a pretty important number from an intraday perspective. Repeat after me, the numbers work. Pause the video, read the notes, go back to the chart and double check the work. It's all in here, everything you need during the trading day from an S&P perspective, whatever you need, whatever you want to trade, whether it's options on the S&P, options on the SPY, the ES, the MES, the exchange traded products, doesn't make any difference. We had 3 stocks on the moves today. We had MU, WDC, and Lennar. MU hit its entry objective. Let's take a look at that chart. There's a 5-minute chart of MU getting a buzz cut at the open. You can see here, played around with the first 2 prices, bounced off the second, back above the first, bounced off the third, back above the first, and then they stayed in this range for the majority of the day. Certainly gave you plenty of scalp trading opportunities in the midst here. This was certainly a support zone. We have the numbers. We have a magic calculator. We've got everything you need to find success trading inside the numbers with me each and every day. Have you seen the list of markets covered? There's a dozen markets here. Couple of case in points today. Look at the price of gold, GC. We want to highlight support number 3, 26.02. Also in silver, we want to highlight $29.15. There's a 5-minute chart of gold, 26.02. Came into it, bounced away on the board at 0 dark 30. Silver futures, $29.15. It doesn't matter whether or not you trade gold or silver. The point is, you've got plenty of numbers up on the board, and what I show you each and every night are examples of the fact that these numbers work, and you couple this with the education you get in the live room, the MSF Masterclass, Lazy E-Mini Trader, these videos at night. If you've been paying attention for years and you've been a student for years and now you have the magic calculator, you have these numbers each and every day posted inside the numbers, this is a recipe for success. What's going on over in Camp IWM? They did not close below yesterday's low. They did not test yesterday's low. We're not going to make a federal case out of that one way or the other. We did have like volume to what we had yesterday, which is interesting. No change from what I said before. That applies across the markets. Looking for a turn, but looking for one more flush lower into the weekend. Looking for him to scare the pants off a few people leading into the weekend. That's the ideal scenario. No idea whether they will give us the ideal scenario. I'm an interested party at 216.85 in Camp IWM. Might want to write that down, put it on a sticky note. What about the folks down at the transportation department? They had another down day, down 90 points, or about 0.5%. Second favorite market leading indicator, a number 1 canary in the coal mine. I still like 15,730, give or take. One more flush day ought to do the trick. What about the Q people? Again, heavy volume. The Q people are below the most recent breakout area. I would love them down at 503.50, give or take. That's an ideal scenario. They didn't rarely give us the ideal scenario very often. However, that's what I'm eyeballing on another big flush in the Qs. Financials finished on low of day. However, they did finish up on the day 0.33%. So a positive day, but finished on low of day, which isn't necessarily any great shakes. We're not going to make a federal case one way or the other. We're going to kind of move it along and say, hey, look, we've been preaching for a while below 49.90. She's no good. She turned out to be no good. There's an open gap down below at 46.70. She's got her eye on the open gap, give or take. And what do we have here with Sir Smashmouth? The Philadelphia Semiconductor Index closing the day below the important triangle trend line. Now, one day doesn't make or break anything. One day doesn't make a trend, as they say in the trading parlance. But 2 days begins to give a clue, kind of like a confirmation type of signal if there ever was one. And therefore, what I like to use is the longer they spend below, the more likely they are having given up that trend line. So this is a red flag, a flare up in the air, day one down below. They don't have to get to the end of the apex. We talked about it a couple of times. They can break below the low or above the high at any point in time. They're beginning to give up the bottom portion. Now, yes, still looking for another flush into Friday and then a turn into next week. It's not a guarantee of anything. We're just using the semis as a pretty good proxy for the tech space. And this is an ominous sign of breakdown below the triangle. Weekly chart, this is not good for the overall long-term bullish case. Next up will be the 50-week or 50-period moving average. And by the way, have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.